Ticker symbol JEPI, JEPI, or the JP Morgan Equity Premium Income ETF is a very popular, more income-focused ETF for more income-focused investors that want to get much larger dividends from day one, and has been an ETF that I specifically have utilized over the last several years. Now, it's no secret that with almost a 7% dividend yield, JEPI could give investors, especially with a decent amount of money invested into it, a massive amount of dividends every single month. But what about for those investors out there that don't necessarily have tens of thousands of dollars to invest into it? Well, in this video, we're going to go over the JP Morgan Equity Premium Income ETF, go over some important stats, and explain exactly how this ETF works. Then later on in the video, I'm going to share with you exactly what an investor could expect potentially with just a $10,000 investment into this ETF and what that would look like for them longer term. Now, some of the results, some of the numbers are pretty shocking, so make sure to drop a like down below, stick around, and let's get right into this one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, just to go over some of the basics so we all are on the same page, understanding exactly what this ETF is and how it works. It says right here in the JP Morgan website, seeking consistent premium income with lower volatility. And that's more or less what JEPI has done long term. Like I said, across my portfolios as of right now, I currently own hundreds of shares. It says JP Morgan Equity Premium Income ETF seeks to deliver monthly distributable income and equity market exposure with less volatility. Now, expertise, portfolio managers with over 60 years of combined experience investing in equities and equity derivatives. The portfolio says this: defensive equity portfolio employs a time-tested bottom-up fundamental research process with stock selection based on our proprietary risk-adjusted stock rankings. Then lastly, disciplined option overlays implements written out the money S&P 500 index call options that seek to generate distributable monthly income. So normally by buying into names like Progressive, Microsoft, Amazon, Meta, etc., these are just some of the top 10 holdings that JEPI has in the portfolio as of right now. By buying into these names, normally you wouldn't receive all that much as far as dividends go, because these are normally more growth focused stocks. But with that disciplined option cover call overlay, this is exactly how JEPI and other covered call more income style ETFs generate a ton of income, in case you're wondering. Now, the results as of right now, it says provided an attractive 12-month rolling dividend yield of around 7.98%, which isn't bad whatsoever, especially if there's some upside. But don't worry, we're going to talk about all that here in a second. Another competitive aspect of JEPI, especially compared to other covered call style ETFs across the market, it's only 0.35% expense ratio. Is very cheap to own, especially for this sort of investment, if you ask me. Now, like the name says, JEPI is mostly an income-focused ETF, of course, but still, investors like myself want to see some upside long-term, which in JEPI's case, it's honestly kind of tiny. A 1.83% increase as far as JEPI's ETF price on the 1 year. Year to date, though, up 3.57%, which you really can't complain about, especially if you're earning, let's say, 7 or 8% per year in yield. If you had 3.5 to 7, that's over 10% return. On the max time frame, though, JEPI is in the green, 13.68%. Although during the same exact time frame, it goes without saying you could have pretty much thrown a dart at the wall and been up much more than this across the market if you bought into more growth style ETFs or single stock names. Now, looking at JEPI's dividends over time, obviously the dividends are sort of all over the place. Some investors like that, some investors hate it. I personally do not like it. I'd much rather have the management sort of make this fund pay the same amount every single month, meaning that months where the fund does better, let's say it makes a little bit more money, and then pay larger dividends when the fund doesn't do as well for a certain month, etc. The fact that the dividends are all over the place, and not to mention the fact that the dividends have been getting smaller and smaller pretty much historically, is definitely one of the negatives from JEPI, if you ask me. Now, I'm not trying to be greedy whatsoever. I'm perfectly happy with a 6, 7, 8% yield, plus let's say 2 or 3% upside. But with other names out there now, like SPYI, like JEPQ, it is sort of a competitive landscape, and there's only so much money to go around. So there is a good argument on whether or not JEPI is even the best income-focused cover call style ETF to invest into these days. But even on the lower end of things, like we talked about, this ETF still is yielding, say, 6, 7, 8% per year, which even if the ETF moves up in price, say 3 or 4% per year, I don't think anyone should be complaining all that loud. Now, before we go over the numbers and what things would look like if you were to invest just $10,000 into JEPI and then not only hold JEPI but also reinvest the dividends all the way until retirement, before we go over that, looking into JEPI's price performance plus dividend performance or total return, combining both of them. Now, if you were to have invested just $10,000 into JEPI back around 4.17 years ago, which is when JEPI first started trading, Over those 4.17 years, you would have an average annual total return. This is with dividends plus price return plus reinvested dividends. You would have an average annual total return of around 12.66%, which I have to be honest, that's pretty impressive. I can't lie. Or a $10,000 investment over 4.17 years would have turned into $16,400 plus, which again, for a higher yielding income focused ETF is pretty impressive. And trust me, I've looked at plenty of these across the market. Now you might be saying, well, that's great. That's with dividends reinvested. What about with dividends not reinvested? Let's say you wanted to spend your JEPI dividends along the way. Well, you still would have had an 11.12% average annual total return and turned 10K into 15.5 thousand. And this is over 4.17 years. So no matter how you want to cut it, no matter the criticism, JEPI has performed pretty well, at least over this time frame. Like I said, moving forward, there's tons of different cover call income style ETFs across the market that are also super good. I own tons of them, but I will say, take my word for it, I've held JEPI for years now. It's been a pretty good holding and I don't really have all that much to complain about. But here's where the real magic happens. And before I see you guys in the comments saying these numbers aren't accurate, there's no way things are going to turn out this way. These are all just estimated numbers just to give you an idea of what long-term investing can look like with an ETF similar to that of JEPI. So take this all with a grain of salt, but with a $10,000 starting principal investment into JEPI and $6,500 beyond that per year. So this is saying an investor buys 10K worth of JEPI to start and invests on top of that. And don't worry, I'm also going to show the results of investing zero or even more, reinvesting the dividends along the way with JEPI stats more or less put in as of right now. Let's see over the next 30 years what we get. $10,000 invested into JEPI would give you around $827 per year in dividends. Not too shabby, but with reinvesting those dividends and with also contributing $6,500. By year number 5, you'd be at $54,000 of principal and $4,200 per year in dividends. Now, because the JEPI is higher than average starting dividend yield, you're going to see a lot more dividend income a lot sooner than that if you bought into something like the S&P 500, VIG, of course, something like SHD, etc. Now, 10 years in this portfolio would already be over $100,000 and over $7,900 per year in dividends. Skipping right along, by year number 20, $323,000 and $22,000 per year in dividends. And by year number 30, this portfolio, in theory, going off these numbers, of course, could be over $750,000 and around $46,000 per year in dividends. Now, I know what you're saying, what would it look like if I bought 10K worth of JEPI, set it and forget it, and never bought another single share, just reinvest the dividends along the way? Over 30 years, you'd have $96,000 worth of JEPI and around $6,000 per year in dividends, which honestly isn't too bad considering you just started off with $10,000. So in 30 years, you guys could 10x your investment and earn a ton of dividends every single year moving forward. But it just goes to show that obviously reinvesting more capital over time, adding more money to your portfolio, is going to expedite things and make things grow a lot quicker. So now that we went through the JP Morgan Equity Premium Income ETF, I shared with you basically more or less all this ETF has to offer and showed you what a $10,000 investment into JEPI long-term could look like. I think it's safe to say that just 10K invested into JEPI, setting it and forgetting it is not necessarily going to be enough to retire off of, but still this ETF, at least historically, has returned some decent returns and most likely in the future will continue to do so. But now lastly, I want to hear from you guys down below. When it comes to the more income-focused ETF playing field, which is your favorites across the board? Drop some of the ticker symbols in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.